Tesla's untouchable status seems to be at risk as the company underperforms its magnificent 7 counterparts to start 2024. We'll look at what's happened for Tesla's share price recently, the factors driving the company's fundamentals, and then also finish off with a little look on the charts to see what we can find about the path forward potentially for Tesla. But before we get the show on the road, remember to follow, like, and subscribe to our page, and leave a comment on the video. Tell us what you think about the outlook for Tesla shares. Last year marked a resurgence for Tesla shares after a period of very difficult times for the company, mostly due to the rising interest rate environment and weaker economic activity that emerged following the post-pandemic boom for Tesla shares and Tesla profits. But coming into the Q4 quarterly report just a few weeks ago, the stock had sold off to start 2024 as an increasingly nervous market looked towards tougher business conditions in the year ahead. And those quarterly results certainly conveyed some of those issues. The results missed on both the top line and bottom line Bloomberg data, suggesting that earnings per share estimates for the quarter was around 74 cents per share, came in around 71 cents. The top line was also weaker than expected. Now, there was some good news from the company a little bit earlier in the year when it did release its production and delivery figures. However, what really rattled investors was some guidance from the company that it expects weak demand in 2024 and potentially some ongoing issues with the supply side of the business, production and deliveries related to freight disruptions at some of the major plants in China and the United States, as well as perhaps some longer lead times than expected on the Cybertruck. So it made investors very nervous, and we saw as a result a fairly significant sell-off in Tesla shares on the days of its results. Now, looking forward, there is the sense that there is a weak quarter coming up for Tesla shares. Now, the good news is that there's the expectations that potentially the company could crack through production and deliveries of 500,000 units or so for the quarter. However, there remains risks on the supply side. The issues in the Red Sea are one of those, but also issues scaling up production at its major factories. And then there's also broader market risks that Tesla faces. One thing that was noted in the last quarter's results were lower operating margins, mostly due to price cuts implemented from the business to try and stave off competition from both legacy players in the EV market and the auto market more broadly, but also some disruptors in China. And there's been a significant production boom from the likes of BYD, as well as other global EV makers, which has flooded the market with new cars, compressed margins, and also eaten up some of Tesla's market share. So those price cuts were really implemented to try and ward off some of that competition. But it has so far seen mixed results, and it was a contributor to those weak earnings in the first quarter. So with all of that said, we're looking now at analysts estimating, this is according to Bloomberg data, a year-over-year drop for the next quarter, Q1, of 26% for earnings per share for Tesla. And there's just a general lack of confidence around a company that once again seemed more or less untouchable, even through years of a lack of profitability and disappointing results in terms of production and other output metrics. A part of it could arguably be some of the diminished halo effects surrounding CEO Elon Musk. He has become a lightning rod for certain controversy over the last few years, and that seems to have tested the patience of investors. There was also recently a major slapdown in a Delaware court about Elon Musk's remuneration, and the implication being that perhaps there weren't enough checks and balances on Musk from the board to be able to ensure that, while he was acting responsibly, but also that his remuneration was fair and proportionate. There was also some salacious details coming out in a Wall Street Journal, arguably hit piece, imply that Musk may have a drug issue, and that he actively encouraged other members of the Tesla executive to partake in drug taking with him. Again, unsubstantiated and denied by Musk and the company, but nevertheless contributing to that real frustration with Musk as a character, especially over the last few years because of contentious commentary on political issues, the takeover of Twitter, now X, and the financial constraints, or I should say financial issues that potentially posed on Tesla as Musk sold some of his Tesla stock to be able to fund the acquisition. So if we look now at how investors are feeling and assessing the stock, well, since the last quarter's results, we have seen a series of downgrades coming through, a bit of a hold bias amongst the recommendations according to surveys by Bloomberg, and a drop in the price target. Again, I should say at a premium still to current valuations, but certainly we're seeing that downtrend in the price target suggestive of waning sentiment. So the year ahead now is looking fairly significant as well as bearish for Tesla's fundamentals, even at a time where we're seeing the EV market shaken up in some fairly significant fashion, which would imply some opportunities for continued growth for Tesla. Let's take a look at the technicals of Tesla now. And you can see here arguably a downtrend emerging, really reflecting that negative sentiment amongst investors and analysts. The stock failing to break downtrend resistance at the start of this year, and after the results that we got a few weeks ago, breaking through that $200, we'll call it roughly $200 to $210 technical support, which is now pushing the stock towards, well, what is arguably the next major level, around $150 per share. Momentum skewed to the downside. It has to be noted that we're looking at the weekly chart now, so a longer term view, but that weekly RSI showing that momentum is skewed to the downside and that overall sellers appear to be in control of the share price. So really, if we're looking at immediate levels to watch that are significant for investors in the medium to long term for Tesla investors, that first previous support level, now resistance between 200 and 210, has to be broken through before we make a real play once again at that downward sloping trend line resistance. A break of that would be a fairly bullish signal. But with how everything is lining up at the moment, the free air, technically speaking, that we have down to $150 per share, well, that'll be a massive level to watch. If that breaches, then you start to discuss the potential of maybe even retesting those late 2022 lows, which was down towards $100 per share. That would be extraordinarily bearish and a long way away from current fair value estimates amongst analysts. But nevertheless, that seems to be how the technicals are lining up. If nothing else, we can say that for the time being, Tesla's share price does remain in a downtrend. So the road ahead does look bumpy for Tesla, and there's a lot lining up against the EV maker right now, both from a macroeconomic as well as company perspective that could constrain the share price going forward. Naturally, we are in a downtrend for the stock, an unfamiliar position for a lot of Tesla investors that have enjoyed the extraordinary astronomical rise of the company's share price. But it is looking like a difficult 2024 now for the company. And we will be watching some of those key levels for signals that either the trend is continuing to the downside or that perhaps the tide is starting to turn.